Hi, Kumar here. Now before we go into the strategies which are going to show you when to buy and sell and exactly how you are going to make money in the forex, we must first explore all the components of taking a trade so you understand everything you need to in order to follow out the strategies later on in the training. The first component is the stop loss, which is what we will cover now. To illustrate the stop loss, let's take a look at this theoretical trade. Stop losses are very important when it comes to trading. They are what protect us from ever losing more than what we want to in trades that don't work out. Of course you're going to have some losing trades, but you will have more winners than losers, and your winners will be bigger than your losers, so the wins will always outweigh your losses. Whenever you take a position in the market, meaning when you buy or sell anything and open a position, you will always put a protective stop in place immediately. So what you're telling your broker is that if the price starts going against me, I want to be out of the position at this stop loss level. So no matter what happens in the market, you know from the moment you put on the position the maximum amount you can lose in the trade. If this stop loss level is hit, the broker automatically takes you out of the trade. Now in terms of how to put on the stop loss and tell your broker where you want the stop loss, I'll cover all of that later on in the training. You don't need to worry about that right now. All you need to concentrate on right now is determining where the stop loss level goes and the mechanics of using the stop loss. So here, when we're entering right here, immediately we are telling the broker that at this price right here, if the market comes down from here and comes down to the stop loss level, I want to be out of the trade. Now if the price does go down to that level, you don't need to do anything because your stop loss level is already going to be there in place in your broker account, and the broker will automatically take you out at that price. So you're going to place the stop through your broker platform, and so when you're putting on your entry order into the broker platform, you're going to also put in the stop loss level order at the exact same time. And as I said, we're going to cover this later on in the training. It is very important that you set your stop loss level when entering a position, as you have to make sure you are managing your risk properly in order to consistently make money from the forex market. We are not just here to make a quick buck. We are here to consistently suck money out of the forex. So it is of ample importance that you understand how crucial using a protective stop is. Right now you only need to understand what the stop loss is and its importance. As I said, where to place it, how to do it in your broker platform will all be explained later on in the training. Here we can see that even though the stop loss level was not hit and we made a profit by exiting higher than what we entered, we still need to put that stop in place just in case the market turned and made us go into a loss. Even if price was at this level right here, and then started dropping down and came down to this level right here, we need that stop loss in place to protect us and get us out of the trade if it's going past a certain point where we want to be out of the market. In this example, we see another theoretical trade where the protective stop saved us from losing more money. So at this stop loss level right there, as soon as the price had reached there, at this point right here, the broker automatically takes us out of the position at a loss. The reason we have this in place is so we don't lose more than what we want to in any individual trade. Now as you can see, all the EMAs are starting to turn now, and price is trending down. If we did not have that stop loss level in place here, and we were still in the position, we could lose a fortune as price carries on going down. So the stop loss should be there, so we are only losing the amount that we want to in any one trade. This is very important to point out. Now that you have learned about the stop loss, isn't it hard to believe how some traders out there don't have the discipline to stick to their predetermined stop level? That is where traders start to lose big. If you stick to your stop loss levels and just follow out the strategy, then you will consistently make money as your wins will outweigh any losses. I really hope you appreciate the importance of stop losses. Now even though whenever we're entering a trade we want it to make us money and the probability that we're going to make money is very high, we still need to make sure a stop loss is in place because we are professionally trading here. There are going to be scenarios where the market could turn, and we want to make sure that we're protecting ourselves from losing more money than we should in any one trade. As I said, your winners are going to be far greater than your losers, and there will be many more winners than losers. But in those losers, we got to make sure that we minimize our losses and make sure that we never lose more than what we want to. Here at Trade to Success University, we never put on a trade without a stop loss. This is the first sign of a professional trade being put on in the market. Now let's see how well you've understood this concept. Click on the button below this video to start a stop loss test. This is Kumar and I'll see you in the next video.